Hello, Internet. How's it going? It is I, the real Randy Chavez. So today, I'm coming at you today with a Bitcoin update video. I'm not a financial advisor. This is not financial advice. But for me, I did put another 500 into Bitcoin last night. That brings my total invested amount up to $13,000. It's worth like 12.5 because I was buying at like 59,000, and then I kept buying all the way down when it retested down to like 43, 45. Consistently still buying all the way up now. Now, some news that we have specifically from JP Morgan is that, or it's from CoinDesk, coindesk.com. This is that broke the news, but JP Morgan sends its private clients a primer on crypto. The report, in which was produced in February of 2021 and obtained by CoinDesk on Friday, has been distributed to clients of JP Morgan's private bank, which requires a minimum balance of $10 million to open an account. So what does that tell you? That tells you that, okay, well, these are the most likely the 1%. Maybe you have some people in there that got an inheritance and whatever. Maybe they don't make that much. But for the most part, this is for the 1%. This is for people most likely not like you and me. Most likely that have just are worth at least minimum 8 figures. But JP Morgan sent a report to its private banking clients to educate them on the risks and opportunities of investing in crypto. Good, right? You're thinking? Well, the report, which was produced in February 2021 and has been distributed to clients of JP Morgan Private Bank, like I said, $10 million to open an account. This comes after CNBC reported in February that JP Morgan co-president Daniel Pinto claimed, quote, demand isn't there yet, end quote, from clients for crypto services, but it, quote, will be there at some point, end quote. So basically, Daniel Pinto says that for most of us, for most retail investors, people like you and me, no, don't do it. Demand's not there yet. Not gonna matter. But he's telling his privileged clients, yeah, 10 million, yeah, put some in crypto, put some in Bitcoin. That really grinds my gears. Why is he telling his rich friends to do it, his rich clients, but not us? All right, now, I think, again, this is just me speculating here, that, okay, well, he wants everyone else to get in first, and then, oh yeah, then have all the retail investors to pump up the accounts that he has over there. The report breaks down how Bitcoin could be valued, applying 3 different metrics: the number of users, the value of gold, and the global money supply. Now, if applying a version of Metcalfe's law that Bitcoin value is proportional to the square of the number of users, it would be worth about $21,667. All right, obviously, we see it worth a bit more than that. Now, 2, if applying the current value of gold to the max supply of 21 million Bitcoin, it would be valued at $540,814. A little bit more than what Citibank says that it'll be worth. Citibank says Bitcoin will be worth about $300,000 by the end of 2021. Again, they came out with a huge white paper being so bullish on it. And number 3, whereas applying the global value of money to Bitcoin's max supply, which is 21 million, would place the crypto's valuation at 1.9 million. So that's a lot. And what did I say? I said in previous videos that Bitcoin could probably get to $1 million per coin by the end of the decade. Obviously, this is after years and years of adoption, which we're seeing already. We're seeing, Jack Dorsey of Twitter and Square, Elon Musk, just so many people, so many other companies putting Bitcoin on their balance sheet. I'm doing that with my companies. I have 2 companies. I'm putting that on my balance sheet. Professional sports stars being asked to get paid in Bitcoin. Now, this report plays down Bitcoin's common comparison to gold. Despite having diversifying properties, Bitcoin's volatility characteristics and correlation profile refute the comparison to the traditional safe haven asset. Now, publicly, what JP Morgan has said is a large majority of institutional investors don't plan to invest in or trade cryptocurrency, according to research by JP Morgan. Yet he sends his clients a private mail. Like, that is ridiculous. Now, of the 3,400 investors surveyed, 78% said it was unlikely their firm will invest in or offer trading services for crypto. Business Insider reported on Wednesday. However, and this was as of March 4th, however, 58% of respondents believe that crypto is here to stay, compared to 21% calling it a temporary fad. Gary Vaynerchuk on Twitter even commented on this, saying, well, a fad is a fad until it isn't. It's true. It's not. The respondents represented 1,500 different institutions, with 89% saying Their firm does not currently invest in or trade in crypto. I think this could be a little misleading just because banks, big institutions are always often behind a little bit. We saw that with Tesla. We saw that with them saying, all these analysts saying, okay, well, it's a car company. It's not worth this, this, and this, because analysts really aren't equipped to deal with, they're specialized in one thing. And when one thing goes outside of that bubble, let's say like Tesla, and okay, well, it's not just a car company, it's software, energy, insurance, all that. Same thing with crypto. It's different for them. They're not really wired for it. Several banking giants have shown growing interest to offering crypto services to clients in recent weeks, with Goldman Sachs announcing on Monday, again, this was last week, the relaunch of its trading desk after a 3-year hiatus. Remember, they tried to do that. I thought it was 2017 they tried that. Apparently it was 2018 they tried the trading desk, but now they're doing it again. Another survey released Wednesday by Blind found that 50% of 1,800 tech professionals surveyed currently own some form of crypto. It's about 1,000 people. Now, respondents included employees of JP Morgan along with tech giants like Amazon and Twitter. Having said that, the Goldman Sachs, ICAP, JP Morgan, and UBS have bought the first exchange-traded product, ETP, that offers exposure to Polkadot's cryptocurrency, it's DOT, for clients, according to Bloomberg terminal data reviewed by CoinDesk. So NFTs, all of these other things are going through the roof as well. Many people are mentioning Cardano. A lot. I would say go, because there's going to be a bunch of these, and a bunch of these NFTs are probably just noise. A bunch of them are probably just speculation. But the ones that I think are probably going to go, again, not financial advice, just what I'm doing, is going to be stuff like Top Shot, which has the NBA seal on it, which is Pokemon Salute, which partnered with Pokemon so they could do the artwork for it. Anything that is partnered with someone that's already there, like a really big company, NBA, okay. NBA sports cards are really, really big. So it makes sense that the moments would be really big. Pokemon is the highest grossing media franchise of all time. It would make sense that their non-fungible tokens would be worth a lot. Now, that said, these banks and brokerages purchase small amounts of shares in Switzerland-based 21 Shares ETP. The data shows the shares debuted February 4th on the SIX Swiss exchange at a price of $22 to $23 and have climbed to $30 since then. The purchase suggests institutional investors' appetite for crypto exposure in the current bull market goes well beyond the market bellwether Bitcoin or even its closest rival, Ethereum. DOT token's market capitalization is currently over $19 billion, making it the 5th largest crypto according to CoinGecko data, which is absolutely insane. Again, blockchain, anything that's going on here, such a huge platform, so many people are sleeping on it. Because not many people know about it yet. Not many people know about Top Shot. The people that kind of hear of Pokemon are surprised that I can make a living. That I have a whole business out of buying and selling Pokemon cards. And then they think, all right, then what is crypto? What is NFT? What are these things? And then Pokemon, this is basically getting in on the ground floor on a couple of these things. Even gaming companies like Earth 2, where it's a virtual reality world. It's in phase 1, but there's hundreds of thousands of users so far. And that's planned to double and triple multiple times in the next coming years because you can't really do anything. Either way, this is something that I think if I was given advice to my clients, which in my high-risk lending, I am a financial advisor, but not here, I would tell them, like, yeah, if you have some extra cash after buying your machine, after buying materials, whatever, extra profit, yeah, put it in these things. Put it in Tesla, put it in Bitcoin, put it in Earth 2. Anyway, that's, Pokemon cards. Again, that's just my advice to my clients, not you guys. This is not financial advice, not a financial advisor. I love you guys. Please comment, like, and subscribe. Comments are good for the YouTube algorithm. I love you all. Goodbye.